Over the past few years, government bonds have become one of the most popular investment vehicles in Zambia. Many investors have moved their money into government securities because government securities offer you good yield rates, a regular income, and are backed by the government of Zambia. But if you've recently invested in government securities, you are going to notice that a lot has changed. On the 31st of March 2026, the Bank of Zambia announced several major changes that are going to affect the government securities market. Terms such as benchmark bonds, liability management operations, revised auction calendars don't mean much to an ordinary investor, but make no mistake, these changes could affect the way you invest in government securities. So the question is, should ordinary investors be concerned? And most importantly, what do these changes mean for your money? In today's video, I'm going to break down the 4 major changes announced by the Bank of Zambia in this public notice. And stay with me until the end, because I'm going to share with you what I personally think is the major change that is going to affect the bond market going forward. Hello, I'm Mukonki Mukonkela. If you are interested in investing, in building financial independence, building wealth, investing in assets such as bonds, shares, and unit trusts, or just generally learning how to grow your money, then you are in the right place. If you haven't subscribed already, consider subscribing to my channel by clicking the subscribe button. You will find it at the bottom. It is down here. Click subscribe right now. Now let's get started. Change number 1, the introduction of new benchmark bonds. The first and arguably biggest change is the introduction of a new benchmark bond structure. Previously, Zambia's bond markets were mainly concentrated around the 3-year, 5-year, and 10-year maturities. Under the new benchmark bond structure, effective April 2026, benchmark bonds will now be 5-year, 7-year, 10-year, and 15-year maturities. The 3-year benchmark bond drops off from being a benchmark bond. The 2-year and 3-year bonds will continue to exist and will continue to be issued, but will now be classified as non-benchmark bonds. We can already see this from the April 2026 bond auction. The 2-year and 3-year bonds were offered as non-benchmark bonds, whereas the 7-year, 10-year, and 15-year bonds were offered as benchmark bonds. Another interesting development that you might have noticed is that the benchmark bonds were offered as reissues rather than new issues. This is a very important point that distinguishes non-benchmark from benchmark bonds. Now, if you're like many investors, you're probably already asking, what is a benchmark bond? Don't worry, because in the next video, I'm going to dive deep into the details of what a benchmark bond is and what it means to reissue a bond. Understanding what a benchmark bond is very critical to understanding the other major changes that were announced by Bank of Zambia. And so a dedicated video in this series is going to be produced to explain exactly what a benchmark bond is. In the meantime, I would like you to think of benchmark bonds as the main reference that determine pricing across the market. Change number 2. Benchmark bonds will grow to 10 billion Zambian kwachas. The second change is closely related to the first. Bank of Zambia announced that each benchmark bond will grow in size and will eventually grow to a minimum outstanding size of 10 billion Zambian kwachas. To achieve this, Bank of Zambia will start reopening benchmark bonds. Now, this raises another important question. Why does size matter? Most investors don't care whether a bond is 500 million Zambian kwachas or 10 billion Zambian kwachas. Because, to be honest with you, majority of us retail investors buy a bond from Bank of Zambia and hold it until it matures. However, pension funds do worry about the size of the bond. Same as insurance companies, fund managers, and foreign investors. You see, the larger a bond becomes, the easier it is for you to buy and sell that bond. And Bank of Zambia believes that by increasing the quantities of bonds in issue, they are going to create liquidity in the bond market and also enable price discovery, because the more people hold on to a bond, the easier it is to determine the pricing of a particular bond. And apart from improving the liquidity and price discovery, the Bank of Zambia believes that increasing the liquidity, concentration, or critical mass of each bond to 10 billion Zambian kwachas is ultimately going to help develop the Zambian securities market. In fact, we can already see the Bank of Zambia increasing concentration of issuance around the benchmark bonds. In the April auction, the 7-year benchmark bond had 1.575 billion on offer. The 10-year benchmark bond had 1.715 billion on offer. The 15-year bond had 1.890 billion on offer. Together, these three benchmark bonds accounted for over 5 billion Zambian kwachas out of 6.3 total auction size. This suggests that the Bank of Zambia is already concentrating issuance around benchmark bonds rather than spreading issuance across different maturities. Again, we are going to unpack this in a dedicated video because this change could have implications for you as an investor and for government's borrowing costs. Change number 3. Bond auctions will be less frequent. The third change relates to the bond issuance calendar. Many Zambian investors in GRZ bonds already know that previously bond auctions used to be conducted monthly. Effective April 2026, bond auctions will now be conducted twice every quarter. Treasury bills will continue being offered every 2 weeks. There's been no change in the auction calendar for Treasury bills. The announcement immediately raised concerns among investors. Many people asked, does this mean that there will be fewer opportunities for me to invest in government bonds? That's a fair question. For me particularly, I asked myself whether I will manage to build the monthly bond investment ladder that I had started to create. For those that have been following me closely, you know that I'm remaining with one purchase in January or June to complete my 15-year monthly bond payments in terms of the coupon income that I generate. I'd planned to create a bond ladder that will enable me to have a monthly coupon income. And so I needed to buy 6 consecutive bonds. This change has affected my plans. Now I have to find a reissued bond that will be giving coupons in June and January. So that requires me to be a lot more attentive to when the bond auctions are being conducted. But you may argue that you could also use the secondary market, which is something that I'm also going to explain in a future video, to realize your investment goals or to create a similar kind of bond ladder. That's a fair argument, but the fact still remains you will need to be much more attentive and have a clear plan in terms of your GRZ bond investments if you want to realize your goals, such as creating a monthly ladder that is going to give you coupon incomes regularly. So why did Bank of Zambia reduce the frequency of bond auctions? Their idea is to concentrate liquidity around fewer bonds rather than spread them across different maturities. Whether this will benefit retail investors still remains a matter of debate. You can argue that this change is going to develop the government securities market and ultimately the retail investor. But I always ask myself, at what pace should these developments be moving? Because we know that for many Zambians, this is when we are starting to put substantial amounts of money in government bonds. And these changes, in as much as they are good for the development of the government securities market, ultimately, retail investors may not understand if the pace of these changes is too fast for them. And so whether these developments are going to be a good thing for retail investors still remains a matter that can be debated. And if we look at the first bond auction results after these changes, which was the April 2026 bond auction results, you are going to see mixed feelings around these developments. Because whereas 6.3 billion Zambian kwachas was offered, only 1.28 billion kwacha was allocated. There was a massive under-subscription of the April 2026 bond auction. And you could argue to say that this is the first time these changes have been announced, and many investors, including institutional investors, don't know what is going to happen. And for a retail investor, you didn't even know what price you are going to buy the bond for, because it's not going to be the face value amount anymore. Whether participation is going to improve as these new reforms take effect is still a matter that we are yet to see. But in the meantime, we can see from the April 2026 result that the market did not know how to handle the April 2026 bond auction. And again, this is something we are going to discuss in a detailed video, specifically looking at this major change. Change number 4, the introduction of the liability management operation. This is arguably the least understood of the 4 major changes. And don't be intimidated by the words liability management operations. It's actually a very simple thing. In simple terms, these operations are intended to help government to manage their existing debt efficiently. Under this approach, investors of selected older bonds have been given an opportunity to switch these bonds with new benchmark bonds before the old bonds mature. Notice the word opportunity. This doesn't mean that Bank of Zambia is forcing people to exchange their older bonds with the new bonds. Investors are being offered an opportunity which they can utilize or not. They are not being forced to exchange their bonds. This is designed again to increase liquidity in the benchmark bonds while helping government to manage their debt maturity profile. Many investors are already asking, what will happen to my existing bond? Will I be affected? Will I be required to exchange my bond? How will this process work? At the time of making these announcements, Bank of Zambia said they are going to provide further information of how the liability management operation is going to work. And when that information is available, we are going to discuss it further in another video. Now, why do these changes matter to your money? I think that is what we are all trying to understand, isn't it? Some people think that these are just administrative changes. They are not. And I'm going to show you why. In the April 2026 auction, investors who were allocated the 10-year benchmark bond received 34.68 million of face value, but paid 35.93 million. This means that if you were buying a GRZ bond, particularly this 10-year bond, you paid not 100 kwacha per bond, but around 103.6 kwacha. It means that you bought the bond at a premium. Now, many of us investors have never had to think about premiums, discounts. We are familiar with the face value and par value, but you've never really paid particular attention to a premium price or a discounted price. Now you're going to have to understand this, as well as the yield rate, yield to maturity. These terms are going to be very important for you to understand the new government securities market, particularly for GRZ bonds. In fact, I've developed a new bond calculator that is going to explain many of these concepts, and we are going to use it throughout the series of these videos. By the way, these series are around 11 or so videos that I'm going to produce, and so if you've not subscribed to my channel already, subscribe right now by clicking the subscribe button. It is down here, and don't forget to turn on the notifications icon so that you can be reminded whenever I release the next series of videos. Going forward, if you are going to be a successful investor in GRZ bonds, you need to understand these concepts. It's no longer about just knowing what the coupon rate is. You also need to know the yield rate, as well as the premium, discounted, and par value pricing methods. And also, there's also a dirty price and a clean price. What are these things? Don't worry, I've got you covered. And as I said, in the next series of videos, we are going to be looking at these things. Now, let's step back and look at the big picture. What is Bank of Zambia trying to do? When you connect all the four major changes, a pattern certainly starts to emerge. BOZ appears to be pursuing three broad objectives. The first one is to create larger and much more concentrated benchmark bonds. That's where we have the 10 billion auction sizes, and also the reduction of the auction frequencies to just twice per quarter. Second, to improve pricing and efficiency in the government securities market. The more investors are holding on to a bond, the easier it is to discover the price of a particular bond. As a result, the overall development and efficiency in the government securities market. Thirdly, to attract participation from largely institutional investors as well as foreign investors. We saw this happening, particularly in the February bond auction, where we had a huge interest from foreign investors, and also the increase in the percentage allocated to foreign investors to around 23%. This shows that Bank of Zambia's objective, one of their objectives, is to ensure increased participation by institutional investors as well as foreign investors. Whether these reforms are going to benefit you and I as retail investors still remains to be seen. And this is a discussion that we are going to continue having, because it's really, really important. As I've belabored the point, this is when Zambians are starting to invest in government bonds. And if these developments, which are positive, by the way, are done at a quick pace, it might deter or discourage retail investors from investing in government bonds. So many things have changed. And it's not just these four major changes. Recently, we've also seen the increase in the withholding tax from 15% to 20%. And the reduction of coupon rates themselves. A 15-year bond, which used to be around 27.7%, is now fetching at around 17%. And so these changes could actually discourage a retail investor, a market which is fundamental for the future development of Zambia's government securities market. And so the pace at which these developments are being implemented really needs to be looked at. and also the systems. Do we have systems that are ready to implement these major changes? This is another video that I'm going to produce on its own. Remember, this is a series of videos. Well, what is my view with regards to which of these is the most important change? My personal view is that the introduction of additional benchmark bonds, or the change in the benchmark bond structures, is the most fundamental and most important change that is going to affect even the other three. The introduction of benchmark bonds affects the 10 billion auction size. It also affects the bond auction calendar, as well as the liability management operations. It is all centered around the new benchmark bond structure. That's why in my next video, I'm going to look at what is a benchmark bond. And I'm going to explain to you why you will no longer be buying a reissued benchmark bond at face value. You may pay a premium or a discount or even a par value. Like the investors that bought bonds in April, they paid a price of around 103.6 kwacha per bond and not the face value amount of 100 kwacha. How did we arrive at these figures? These are the questions that I'm going to answer in the next video on what is a benchmark bond. If you found this video useful, don't forget to give it a like as well as share this video. And I would like to hear your views. Amongst the four major changes, which one do you think is the most fundamental change that is going to affect the GRZ bond market going forward? I would like to hear your comment. If you haven't subscribed already, consider subscribing to my channel by clicking the subscribe button. You will find it at the top. It is up here. Click subscribe right now. And thank you so much for joining me today. See you in my next video when I look at what is a benchmark bond.